Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to do our daily technical analysis update. We'll take a look at the dollar, yields, precious metals, commodities, and ETFs that I follow. We'll also give you my financial opinions along with all of this stuff. If you need any help with anything commodity related or stock market related, check out finding-value.com. Become a platinum member, join our community. Use the word discount in the coupon code for a discount. And don't forget, we've got a platinum question and answer session at 5 p.m. Sunday. And we've been looking a lot the past few weeks at precious metals sector, which is doing very well. So let's dive in here. Let's take a look and see what's going on. We've got the DXY. It is dropping here. This circle is where the bull market for commodities started. That's the bull market in March of 2020. We've had an increase in the dollar, and now we're starting to get a pullback in the DXY, the relative strength of the dollar. And again, today we've had a decent sized pullback. It looks like that's continuing. I still think it's going to continue lower, which is good for commodities in general. Generally, when the monetary conditions loosen or when yields go down, the DXY follows along with it. It seems like that's the case. So we're down 0.5% or so in the DXY. We've got a really good pullback in the 10-year yield. What I'm seeing here is this is one kind of continuous move. It's continuing to pull back. It's gaining steam on this, we'll call it the pressure of yields to go lower. And I think that may continue. I don't see a reversal candlestick here. This could also be one of those double tops or a Batman top that is occurring, and we could see lower yields. What that means is that if the 10-year yield falls and this curve uninverts, it means that people are scared. It means that there's fear in the markets. It means that the market conditions are good for some assets and not so good for other assets. Those assets that are going to do well, in my opinion, is precious metals, because we've got a falling DXY with falling rates, and fear is elevated. And it looks like that market condition is going to continue. The 30-year yield fell as well, 1.37%. It's playing with that resistance support level, and we could break this to the downside, and that's what I expect to happen. I think that the tailwinds are going to be at the back of precious metals right now. Bond prices also going higher. We're right at that resistance level, and we could see a breakout to the upside for bond prices. That is analogous to that fear in the market, and we're seeing positive signals in some of the fear trades, so to speak, with gold going higher and also TLT potentially going higher in the short term. We saw the TYX-TNX ratio start to come on up. And again, this is basically looking at the curve. Gold did very well when this curve uninverted last time. It did not do so well when it came back down. It basically consolidated. And now we're starting to put in a fantastic pattern for this to move higher, where TYX will go down less than TNX. It's the curve uninverting. Which is a tailwind and tells us signals or signs about the market conditions that are coming and that we are in and that we have just transitioned into. So those look fantastic for precious metals, in my opinion. We can see that the U.S. 2-year government bond yield is looking like it's going to fall and probably do a retest down here. This is probably going to take some months. Maybe even up to a year or 18 months at most. Last time we saw this happen, we went from peak here all the way down to March of 2020. That started in October of 18. So that lasted longer than a year, last pullback. I don't know the length of this pullback, but I would assume something around a year to 18 months is a possibility, which means that precious metals probably have a good tailwind for about a year or plus. And that tailwind's probably going to bring us down here. That is my guess. That's going to be Supportive of lower yields and maybe even supportive of the housing market if yields and mortgage rates fall a little bit. Looking at the CRB index was flat today. We had oil prices that were basically flat today as well, but we were flat. The CRB to S&P 500 was also flat today, just moving sideways. Not much to really report there. Gold prices launching to the upside, breaking out of this pattern. This could be the beginning of a new up leg in gold. This is where I am ultra bullish. We can even zoom in on it. You can see the run here today, breaking out, and that correlated with yields falling. Yields fell at the same exact time that gold shot higher. So gold's looking fantastic for a very big move to the upside. Look at this. This is a, let me get on logarithmic here real quick. Logarithmic, and even back, I need to back out a little bit more here. Zoom in. You got the cup and handle pattern that we've broken to the upside, and this thing has a long way to run. One, you've got the market conditions of that yield curve uninverting, which has a long ways to go. And we also have this pattern signaling that we've got a long ways to go from the pattern as well. So this is probably the single most bullish area in the market at the moment. Silver's also looking fantastic for a move higher. Rocketing today looks great. This whole area looks absolutely fantastic for continued outperformance. So that looks great. Platinum also joining in the mix, up very big today, looking fantastic. XAU to gold ratio outperforming gold itself. We are, if I were to take a guess here, guys, we are looking at trying to break this downtrend line for a move on up. This means vast outperformance of the gold and silver mining companies. This setup is very much similar to early, or I should say, later 2020s for oil and gas. This is still incredibly low for the gold and silver mining companies. It has a long runway ahead of it for appreciation for the gold and silver mining companies to appreciate against gold, which I think gold is going to go higher. So GDX rocketing higher today. Nice big candlestick, 3.36%, finishing strong, is strong, looks great. SILJ also going up to 2%. I do think that some of these are going to accelerate now that they're starting to break out of their patterns and going to move to the upside, hopefully in a dramatic fashion. Crude oil slightly higher today, but I would say it's basically sideways. Crude oil can go up during this type of period if there's enough of the supply being restrained. But generally speaking, this is not favorable market conditions for oil at this exact time. Although oil prices have broken to the upside and do look strong. We very well could fill this gap. But I do think with the supply side and what's coming, that oil could still do well. Natural gas moving sideways, not much to report there. It's still trying to base out. We've got XOP, yeah, you know me. Are we going to break higher or are we going to come back down? We've got this trend line coming on up that we've broken to the downside. We're doing that return move right now. And this is generally where I like to rotate money out of one asset into another if I have a more attractive asset. OIH also selling off a little bit today, 3.2%. And again, we're up against this resistance. We may pull back a little bit in the short term and get a little bit of downside pressure here before heading higher. And that could last for a while. Depends what the market conditions and what the fear is in the market. Basically, what we're doing on a longer term view is we've got a shoulder, head, and we're probably going to put in some sort of shoulder pattern where, let me kind of back out here, guys, just to give you guys a, and we're probably going to put in some sort of shoulder here over the next period where we've got a shoulder, head, shoulder. And then we'll break to the upside and everyone will be happy and it will be a very large move out in the future. Sprott Physical Uranium Trust selling off today, down 0.91%. Doesn't look horrible, but doesn't look great. We still have a lot of selling pressure here, and this could be a flag pattern where we could head back lower in the short term. That's what I'm seeing there. URNM also getting some selling pressure today. We do have a little wick at the bottom. There's some buyers there. Again, I would say that the market conditions are not super favorable for oil and uranium, historically speaking, but if the shortages are large enough, that's where things get real iffy. Generally, the shortages were created by credit expansion. Now the shortages are being created by supply problems, which I don't know if we've seen that ever before in uranium. They've always been surpluses of inventories ever since the 1970s. TAN's basically still squeezing up. Not much to report different there. Copper still, we're down a little bit today. We're right on this resistance line, right, just kind of hugging that thing. We'll see which way we go. Lithium selling off a little bit off that resistance line that we hit, just bouncing back off of it. Rare earth metals doing the same thing, hitting resistance, bouncing back off of it. We'll see how far it bounces down. The S&P 500, we are getting a little bit of, I think we're going to come back in this a little bit. That is a bearish engulfing pattern. Short term, getting a little bit of resistance there. We do want to break through here if we want to get into and create a new high. That would be very much bullish. And again, another bearish engulfing where we could pull back. We're right at this resistance level that we're trying to break through, and we'll see if we can break through it. Emerging markets going sideways. Nothing new there. Still looks good. XHB, the home builders, selling off back to support. Is this a retest where we go higher? We'll find out. Moo also selling off a little bit, and I do think this is going to head lower. That is a bearish type setup. We've got strong selling pressure, not much buying pressure, and stronger selling pressure. That looks like it wants to head lower. Copper still heading lower up today, down 2%, but still above this massive support area. So we're above a bunch of support, and it looks actually very well. Lumber heading higher today. I know that's also on the support area, the long-term support area since the early to mid 1990s. Iron ore just moving sideways. We do have a little bit more selling pressure. This does look like it wants to continue lower in the short term, and it's broken out of this falling wedge to the upside. So we could come back here to $100 or so. Looking at nickel. Nickel still chopping sideways, still looks fine. We've got aluminum moving sideways. It's down 0.7, but it's not really a huge selling pressure day, but it's just been chopping sideways here. Baltic Dry Index slightly higher. Again, that's also just chopping sideways at this moment. And then we got Newcastle Coal up 3.63%. Looks like it's trying to put in some sort of bottom. I am in the camp that this is probably going to come back down and do a couple more, consolidate for a little while, just like natural gas is. Ethereum heading higher. This means that liquidity could be coming into the markets, but that's heading on up. And same with Bitcoin is also, which is putting in inverted head and shoulders, which I think will eventually go higher. Depends how much liquidity they add to the system. What we're seeing, if we were to look at this from a big picture view, the way that this thing happened, or cycles, liquidity comes into the system, inflation comes 6 months, 12 months later, something on the lines of that. Oil jets on higher, uranium jets on higher. A lot of these commodities go on higher under that inflationary impulse move from the liquidity coming into the market. Right now, we were coming from an area where liquidity was slowing down. We'll call it a disinflationary period. Then what happened is we had a problem in the banking system. You could see yields fall, people getting scared. It's happening right now, that people getting scared. We had more liquidity be added to the system. That's what the bank's balance sheet increased by 300-something billion. So that's liquidity entering the market, but that won't be seen for a little while. What's pricing this in is Bitcoin, Ethereum, gold, all that is pricing that money coming into the system. Is there more liquidity coming in the system? We'll find out. But if there is, it's going to drive gold and these liquidity assets higher. And generally, if you look at the time frame, it goes gold first, gold, and it looks like Ethereum, Bitcoin might be also heading higher. And then eventually oil and a lot of the other commodities will head up afterwards. But that's what I've got for today, guys. Thumb up for the content, subscribe to the channel, subscribe to the website, and I'll catch you later. This is Finding Value.